$450 million of income just wiped out like that. $135 million in company tax avoided, and over $63 million of funds lavished. This is the story of Australia's biggest tax fraud case. Hello everyone, my name is Ethan Rushock, and today I'm going to be going through Australia's biggest tax fraud case, and by the end of it, it'll have you scratching your head asking, how did they get away from this for so long? I'm going to be going through what happened, how they were getting away with it, and how they eventually got caught. So the story behind this case, if we've got two individuals, we've got Anthony Dixon, and I'm sure I'll stuff this pronunciation up, but Michael Isekindis. Isekindis? Yeah, Michael. So Michael and Anthony decided to go and set up a company here in Australia called Numedics Health Australasia. So the general concept behind Numedics Health Australasia was that inventors in the medical space were seeking out people to help fund their clinical trials. So this is where Michael and Anthony would come in. But the way it worked is that the IP rights were sold off to a new company that was set up in the Cayman Island, Athena. And this company would take over the IP rights. But then this company in the Cayman Islands was then selling these back to the company in Australia. This is where it gets interesting though, because they had set up multiple companies. There was companies going everywhere. I think there was 8 in total, and some of these were actually completely fake. But what they were doing is then using a dodgy way to value. So they were overvaluing these IP rights in the Cayman Islands. So that then when the Australian company bought them, they were overpaying for them. They were paying way more than what they're worth. They would then go and fire the inventor. So get rid of him. And then they were writing off this amount they had paid from Australian company to the Cayman Islands company as a loss. Because they're saying, well, these IP rights are completely depreciated. They're not worth anything because it's not going anywhere. And they were writing this off at a way higher price than what they were actually worth, because they had overvalued them themselves in a different country using false identities. So they had created this web. Like I said, 8 different companies. They were creating false IDs. They had created all of this complex nature to try and hide their activities. And because it was happening in companies that have quite generous tax systems, they had a way that they were claiming these massive losses in this Australian company. Now, why, you may ask? Because losses on their own don't do anything. If you have a loss in a company with no income, it doesn't do anything. You don't get any tax back. But they were clever. They were using this company that was based in Australia to run legitimate businesses, doing buying and leasing, and they were racking up hundreds of $millions of income in this company, but using these falsely created losses to offset that income. So they end up with approximately $450 million of income that they were able to offset with these false losses that they had created, and therefore saved themselves over $135 million in company tax in Australia. And this all looked legitimate because we had genuine business income that was a legitimate business. This was then offset by expenses, and the expenses were where the fraud was happening, because these expenses were falsely created through that offshore company by overvaluing the IP and then writing it off. So it was quite a complex scheme with all the different entities they had involved, but they were in control of all of it, and it was working well for them. Like I said, $135 million in company taxes avoided. But they started to live lavishly, and it's approximated that they end up with about $63 million in assets and stuff that got siphoned back to them. And this went through a range of different companies, and they were all over the world. So we had stuff in the UK, the UAE. This was all funneling back into them to allow them to live these lavish lifestyles. But this is where they started to get caught out, and I'll talk about that more later. So it was all this web. They were able to run a legitimate business. They were able to run some fake businesses that looked legitimate by causing large losses. And they were able to have a system to be able to bring some of that money back to themselves so they could live lavishly. But they got caught. They eventually got caught out. And it happened for 2 main reasons. Now, before I go and tell you how they got caught out, I'm trying to get to 10,000 subscribers by the end of the year. I'm at just over 3,000. So if you can hit that subscribe button, it'll definitely help me achieve that goal. And it will avoid me needing to go into a life of crime. So hit subscribe. First, that lavish lifestyle. And that lavish lifestyle is very hard to support if you don't have the genuine income to back that up. Now, they obviously had a web to try and make it look legitimate. But the ATO and any tax office around the world is going to look at individuals' lifestyles and see, do they have the taxable income to back this up? How are they funding this? Michael and Anthony were definitely happy to go live lavishly, whether this was through cars, they bought a shopping centre, they were buying houses, they were going on holidays, you could see that they were living it up. They were definitely making use of these funds. But when you've got a company that's showing all these large losses, it might not always back itself up. Now, while they did have some legitimate income there, was it enough to support that level of lifestyle? The other area they fell apart is data matching, and data matching is only getting better these days. We've got companies all around the world that are going to be working together, governments, and they're going to be sending different bits of data. And we've got AI now that is going to match things up and go, hey, this doesn't look right. So it was quickly picked up. The Numatics' income expenses just didn't look right. There was a bit of a pattern to it, and that is one of the areas that the ATO started to investigate. And once they started to investigate, that's where things started to fall apart for them. So in May of 2012, they were arrested. They were charged with tax fraud and a range of other money laundering crimes, and they got quite hefty jail sentences. So Anthony ended up with 14 years in the end, and Michael 10 years. And there was a bit of issues going on with one of their wives trying to keep some of the assets, but all the assets eventually got seized as well. So they got away with it for a bit. They enjoyed these lavish lifestyles, but it caught up to them. At the end of the day, crime catches up to you. Do you want to know more about how the rich and the powerful live? Well, I've got another money-based topic coming up that I think you'll enjoy. I thank you for watching. I'll see you on that one.